Today we're highlighting 5 new planning opportunities in the American Rescue Plan. Stick around to see how it may affect you. So the American Rescue Plan is now law. And we have 5 planning opportunities that we're walking through today that you should be aware of if you're going to file your tax return this year, because you might want to wait. Grayson, isn't that right?
Yeah, there's a few things that can really be impacted by the return you file this spring for 2020. The first one being, of course, the stimulus payments, which we've all heard about, up to $1,400 per person. And this time, unlike the first 2 iterations of stimulus payments, they've expanded the base of people who may qualify. So some of your college-age children or other dependents may qualify for benefits this time when they did not the first 2 iterations.
Right, so something to be aware of there. And a lot of people want to file their return quickly. Why is that not the rule this year?
Usually we are all kind of in a rush to get that chore behind us, but this year what they're going to be basing that stimulus payment off of is your most recently filed income tax return. So in the spring of 2021, that could be your 2019 return if you haven't filed your 2020 return yet, or your recently filed return that you filed probably in the last month or so. They've changed the income thresholds for the stimulus payments a little bit. They've really narrowed your income ranges a bit. So if you earn $75,000 or less of your AGI, you're going to qualify for the full $1,400 payment, but it quickly phases out this time. If you're above 80, no stimulus at all. And if you fall between 75 and 80, you're going to get sort of a partial payment. That's for single filers. For joint filers, 150 AGI is your target. That or below, full payment. Above 160, so again, a very narrow range, no stimulus payment at all. And if you're between 150 and 160, you'll get a partial stimulus payment.
All right, let's talk about number 2. That is the health insurance changes around employer and the ACA.
So we have 2 different kind of coverage opportunities here. The first one being COBRA, which is continuing healthcare coverage through your old employer plan. If you were laid off or terminated, you're going to see, it used to be that you had to pay the full coverage out of pocket, which you're used to having that subsidized by your employer. So you used to have access to the plan, but you had to pay the full amount out of pocket. The big change with the American Rescue Plan, though, is they have made it to where those ongoing premiums for the next 6 months only, so through September, fully subsidized. So $0 out of pocket cost to you as the old or ex-employee. So potential benefit to take advantage of there, and you'll have 90 days post-termination to enroll in COBRA if you choose to do so. So a very narrow window, again, to take advantage of that opportunity.
And then the Affordable Care Act, big changes there on the income spectrum, right?
Yeah, so there's a lot of different thresholds when it comes to the ACA and income limits and poverty lines and percentages of poverty lines. So check out the episode for a little bit more detail, but you may find you qualify for more subsidy than you're used to, or maybe you used to not qualify for any subsidy at all, and you might get a small subsidy in 2021 for your healthcare coverage.
Yes, more on our podcast episode linked in the show notes below. Moving into our third option here is revolving around the child tax credit and how that's changing.
Yep, so they've expanded and built upon the base of the child tax credit as it is currently in tax law. It used to be $2,000 per qualifying child. They've expanded it to include more children. So it used to be age 16 or younger. They've expanded it slightly to be age 17 or younger. So some of your older children may qualify now and they used to not. And it went from $2,000 per child up to potentially $3,000, or if they're younger than 5, up to $3,600 per child. So some potential windfalls for some parents out there, but there are a lot of different income levels you have to be aware of when determining how much you're going to qualify for.
There's also changes to the dependent care credit that we talked about in more detail in the podcast episode you can check out.
Yeah, and then number 5 is changes to unemployment compensation and the expansion of that.
Right, and this is the one that is actually reaches back a little bit potentially into your 2020 tax return. If you received unemployment compensation last year in 2020, you may want to hold off on filing your tax return. because they've made it, depending on your level of income, again, which we've said a lot so far this episode and also in the podcast, you may actually qualify for some of that being tax-free. And for forward-looking unemployment compensation, they've extended both state and federal benefits through September 6th, which was set to expire in mid-March.
Right, so a lot of big changes here. Check out the show notes below on our website at financialsymmetry.com. You can also subscribe so you don't miss our next episode. Thanks for joining us today.